If I was to journal my trades, if I was to journal my trade in 2026, this is the best way I could have done the journaling. Most of the people talk about you should consider taking a screenshot also before and after a trade, and also you should consider writing down actually what you were thinking and what you were seeing when it comes before you were getting into that trade. I just find that kind of outdated, and again, most of the people prefer using softwares whereby you just execute a trade and it is automatically filled into that trading software trading journal. But for me, I'm now trying to reason and also come up with a better way of recording this trading journal. Now, this will be the first trade of 2026. This will be the first trade of 2026. Let me just break it down, actually, what I was looking at, and so that at least we can get to see how the price will actually play out. Remember, trading is 98% psychology. The 2% is the system. Remember, you can have one of the best trading system. You can have one of the best trading system. Unfortunately, you end up being unprofitable, being based on your psychology. Based on your psychology, you can have the best trading system. Now, when your trading psychology is not in good condition, you will always lose money. Let's cover it. This is one of the pairs. This is a Gbpjpy. Gbpjpy. Let me give you the reason or the breakdown, or let me just break down how I'm doing this analysis and the reason why I am executing these buys. Now, analysis on the fundamental analysis, let's cover on the Gbpjpy how these are get to break it down. Gbpjpy, it is quite simple. First of all, you are going to trading economics. You are just going to get into the trading economics. Remember, my trading system or my trading journal or my trading system is kind of divided into two. This is something you should expect, and we can see whether we are going to repeat it each and every day. Now, for now, my trading journey or my trading system is basically based on two, whereby we have divided into two: fundamental analysis approach, fundamental approach for the buyers, and then technical analysis for getting points or places where the price might react from, and then we shall be having the execution. Now, let's cover the reason why I'm buying right now. So this is Gbpjpy. So the reason why I'm doing buys, you just have to go to trading economics, then get into this kind of on the left side top, get to the country, then open one of the countries that you want to cover, and for this I will go with the United Kingdom. The first thing I want to just cover is the growth GDP growth rate. On the growth rate, I'll be checking whether the GDP is rising or dropping. For currently, we can see very well the GDP is actually dropping, whereby it is dropping from 0.2% to 0.1%, which is actually a drop of the record. Now, something else I will be checking out is on the inflation. I want to understand whether the inflation is rising or the inflation is actually dropping. Now, on the inflation, I will just click on the inflation and get to understand where the inflation is. Then, when I'm doing the analysis on the inflation, I will have to consider whether the inflation is rising or dropping. And we can see very well that the inflation is actually dropping from the last, which was the previous one, which was 3.6%. Now, right now, which is at 3.2%, which is actually a drop. And again, we need to understand the price or the inflation being at 3.2% is actually very high compared, or very high more than the Bank of England inflation target, which is always at 2%. And therefore, this one tells you the two of them, they are actually dropping. Now, remember, I'm trading from the perspective of the prices of the prices of forex markets do not actually move randomly. They move based on the interest rates. We say that interest rates are the heartbeat of price movement when it comes to the forex market. And therefore, having understood that, now GDP is dropping, inflation is also dropping. Now we can expect the headlines to be reading about UK looking forward to cut the interest rates. I repeat, having the GDP dropping and inflation also dropping, we can expect the headlines to hit saying that we are looking, the Bank of England is looking forward to cut the interest rates. So we shall be in a position to interpret that. But that is not straightforward. Remember, if you don't know how to do that, you can still reach out to me. I go by the name of Kelvin. I'm a currency trader and also a trading coach at my RatePulse market. Now, having covered that, the last thing I want to cover is I want to just cover something else, which is very good, and also much to pay much attention to. And this is what we call the unemployment rate, the job sector. Now, I will be checking on the labor. Let me just go to unemployment and then to check on what the inflation or the unemployment is doing. You can see from this, you can tell very well that the unemployment is quite very high. It is quite very high, and when the unemployment rate is very high, you expect the currency to perform not that best. Now, that is now the GDP. When it comes to the last thing that you want to cover is what you call the bank stance. That is now the bank stance. What are the banks willing to do? Right now, we are like on the United Kingdom, there's no straightforward, but you can still read if you want to understand it. Overview, then go to what we call the interest rates, something there below. Just come in the interest rates to understand what they are looking forward. UK inflation slowed. I'm reading right now here, and then we can see there's nothing much. This is the MPC stated that future policy easing. You see now they are looking forward to ease, so therefore their stance is that they will be looking forward to ease. But is there? You need to understand first of all. Let me just highlight it. The MPC stated that future policy easing will be guided by developments in the inflation outlook, adding that the degree of policy restrictiveness has diminished. What the hell is that? Okay, anyway. So, after now, understand that Nikona Homa, understand that I have a Homa, so that flu is kind of bringing toughness into my tongue. Well, anyway. So, therefore, the bank is actually looking forward to ease. That is now to cut the interest rates. And of course, that is what we're expecting. Therefore, it will be a dovish for the GBP. Now, having covered that, the next thing you want to cover is just go that. So totally, we can say that we are looking forward to sell GBP. Now, let's look on something else. Just go for the next currency. Go to the countries. Just come to Japan and like to see what Japan is doing. Actually, Japan is actually doing very poorly compared to UK generally. Let me just go straight forward. The first thing that we said is to cover what we call the interest rates, or the GDP, sorry. Then the GDP, you can see very well from the diagram or from the graph. You can see the GDP is actually dropping from 0.5% and then up to negative 0.6%. I don't know. Okay. Then being from the bar graph itself, it's just self-explanatory. So we can see that it's actually dropping, like the UK one. Then just go back again, look at the inflation. Look at the inflation rate, and you can see very well on the inflation is actually also dropping from 3% to 2.9%. Even if it is dropping, you need to understand it is not within the Bank of Japan inflation target. The Bank of Japan inflation target is always 2%, which is therefore 2.9% is actually higher than that. Therefore, we already know that when it comes to JPY, it's also inflation is also decreasing, and also GDP is also dropping, and therefore those two should be giving you a very good vibe when it comes to interest rates expectation. And therefore the expectation that we have in our mind is that we shall be having the headlines which will be hitting that the Bank of Japan is actually looking forward to cut the interest rates. Now, that is not always the case, because right now the Bank of Japan is looking forward to tighten, is giving out the signaling what we call tightening of the monetary policy. But we already know even if they are going to cut the interest, this is not the first case that you have seen. The interest rates comes out very high. Unfortunately, the price tends to move the other direction. It is not once it has happened. It's because what we call they can be what we call dovish and hawkish. And therefore, even if they will be looking forward to hike the interest rates, that one will be interpreted as a dovish hike, and therefore the price might also be dropping. And therefore, since we still have the next thing that we are going to do is that we only have 14 days whereby the Bank of Japan will be releasing their interest rates, and therefore most of the thing you will come to understand that 2 weeks to the interest rates, the market tends to be pricing according to the interest rates expectation. So the kind of headlines I'm expecting from next week is that we shall be having what we call Bank of Japan interest rates hike doubt. Most of the people or most of the investors will be doubting the hiking of the interest rates, and if they will be looking forward to hike, it will always be hiking a dovish hike. Then, having covered that fundamentally, you now understand that we are actually looking forward to a dovish Japanese yen, and also we can check on the last thing, which is actually the fundamental the unemployment rate. Just go to the labor sector, then you can check on the unemployment rate and see how we are performing. Actually, you can see right now the unemployment rate for the Japan or for Japan is actually at 2.6%, which is now the highest it has ever been. You can read that the Japanese, you can read from this, you can see Japanese unemployment rate stood at 2.6% in November 2025 and changed from the previous 3 months, and in line with the market estimates. It remained the highest reading since July 2024. By that, you can tell now the unemployment rate is actually very high. Now, fundamentally, that's all what we have. So both of these pairs, both of these currencies are actually very rich. Japan tends to be kinda way it's kinda way weaker compared to the UK currency, that is now the sterling pound. Now, remember, if you check very well on the daily time frame, this price has been pushing to the upside. So we are not going to be trading. It's not a reversal. What we shall be trading is a trend continuation. Now we are done with the fundamental analysis. That's all what I do cover. Then let's look at what we call the technical analysis. Then technical analysis is divided into two, whereby the first thing is to understand where the price is likely to react from, and this one we shall be looking forward to demand and supply. Then we shall be looking towards what you call resistance and support. So the first thing you want to do is just draw support and resistance. You can see as I have done. Then the next thing you need to understand is to point out whereby we have recent break of structures. We can see we have this kind of a break of structure. After that huge move into that direction, we have this break of structure on this level. Then if this is now my break of structure, you can see very well, if this is the break of structure, we have a very imbalance to the upside, which is actually now the imbalance now. This imbalance and also break of structure is giving me the vibe that we shall be having a very good demand zone into this zone. Now, after that, from the daily time frame, get to drop down on the 4-hour time frame. Now, on the 4-hour time frame, we should be expecting the price to come back into this zone. we should be expecting the price to come back into this zone so that at least we can have our buys. This is what we are actually expecting. Now, but there's something else. But remember, this price might not come into this zone and can also proceed to go to the upside. But this trading opportunity, the buyers right now, is actually based on that we only have 14 days. We only have 14 days. Let me show you. We only have 14 days for us to have what we call the Bank of Japan, which is now another rule which is I mostly consider. Let me just go to my FX book. It is quite simple. Remember, I'm a fundamental analysis, like a macro economic trader. So I'll mostly depend on macroeconomic, like microeconomics. Therefore, just go to the interest rates. On the interest rate, you can see how many days we have to get the interest rates released. It's simple. So on the Japan, this is the thing. We only have these. What the hell is going on? Okay, there's a lot of ads on this website. Anyway, interest rates back. Then let's go and check. So look at this. Look at this. I don't want to continue. Let me just ignore this one. Then later, then highlight Japan. You can see now Japan, we only have 14 days, which is within the range of my target. That is now 14 days, another 2 weeks before the interest rates. We shall be having the price reacting to what we call the interest rates expectation. And my expectation is that Japan will be in kinda a dovish very good dovish hike. And again, let's check on the GDP. So on the United Kingdom, let's see. Now on the United Kingdom, you can see very well we only have 27 days, which is way far from the interest rates release. Therefore, the market will be playing or will be pricing something else. Therefore, let's check. Since for the 2 weeks, this is a very good opportunity. Then let's check out. The first thing that we are going to check is a break of structure on the 4-hour time frame. You can see we have that kind of a break of structure to the upside actually. Then after that break of structure, we are supposed to look for a demand zone. On this range, you can see that the price was actually in a range. There's a video that I did on the weekly forecast, and they say that we should be looking forward to have the price dropping before bearish to this side. Unfortunately, the price has broken to the upside and then is back into the demand zone. Then how do you get to determine a demand zone? Within this range, we understand that when we are looking for a demand zone, we should always be considering something to buy from discount. That is now when the price is cheap. That is now the premium. Get to understand the analogy of premium and discount. Therefore, for the demand zone to be into this, just highlight that range. Then the 50% of this range is actually, you can see, let me just have it divided into with another color. Middle, let me just give it blue. Let me just give it red. No, let me just give it black. Yeah, black looks visible. All right. Remember, now you can see that this is now the discount level of this zone, and therefore that is where I want the demand zone to be. Remember something else. For the demand zone to be valid, we have two types of demand. We have pivot demand zone and we have range demand zone. For this one, it's a range. If you want to understand, I will be doing all those kind of content related to that. Now, this one is a range demand zone, whereby a range demand zone, what we expect is something like this. This is the best demand zone to ever look at. To look for. You can see now, we go for a sweep and then projection to the upside. If you cannot see, based on the candlestick, we can see still there was a liquidity sweep to the downside and then projection to the upside. But if you cannot see very well, you can turn into a line graph and you can very well see the projection, what I'm talking about. So therefore, this one is a demand zone. Therefore, let me just get back into the candlestick. And again, you can also try to look at something else. You can also try to join the zones into a very good chart pattern. If you draw very good chart patterns, let me just have it into that way. Then there is what we have, a very good flag to the upside. Therefore, the last thing we need to look at is for the entry point. So we already know that this is a very key point zone where we are looking at. And then the last one is the 1 hour time frame. Remember, for you to execute the trades, it's quite simple. For you to execute the trades, it's quite simple. You need a confirmation for the entry. For this, when the moment the price is actually on this demand zone, we can see after this projection, we had a very good after now this price came into this kind of anini, we had a very good drop. Allow me to delete this one. Let me zoom out. Now we had a very good drop to the upside, to the downside. What I will be expecting, the first entry is always direct. When the price, you can just have a sell limit, but for you to before you get to execute, just go on the Forex Factory. Go to Forex Factory. On the Forex Factory, you should be looking for what you call whether we have any news related to this pair. But currently, we don't have any news related to this pair, even tomorrow. And therefore, we can consider just come after the closing of that candlestick. This is now the long position. Actually, I took my first position at this zone. This zone after the rejection. Let me just explain. You should be looking for something else, something good. You can see this candle before this drop. There was a very good candlestick, which was a very good with a very good rejection, up here from the left, like the second last candlestick. So after that kind of a projection or closing of that candlestick with a rejection, I just entered from there, and then I set my stop loss around 50 pips. I'm always looking at something 50 pips. I don't go beyond 50 pips. My stop loss is always supposed to be 50 pips. 30 and 50, the range. Now we should be looking forward to target the previous high. I'm going to have this one as my target, and I'm going to have it in blue. I'm going to have it in blue, and then I'm supposed to have it dotted. Remember, dashed. Remember, this is my first entry. If I was to drop down, we can check whether we have something like a CPR. Now we can see looking very well. It seems like we have a very good change of character on this zone. Unfortunately, it's not yet confirmed. Therefore, this is my first trade, which is a very low risk trade. What do I mean? When I say low risk, this is what I mean. I'm not going heavily on this trade. No, I'm not going heavily on this trade. Yes, because it is my first thing. It is my first trade. Therefore, the second heavily confirmation will only get, I will get to trade heavily if price happens to kind of from this zone drop, yeah, then get what we call a CPR. Go for the liquidity, then or maybe again push to the upside. This only should be the second entry and heavily execution. But if you don't go for that kind of a liquidity and still get a CPR, maybe from this zone, yeah, something else from that zone, let's say for example within that zone we go for something like this and then push to the upside, I will still get in for more position. And therefore that is now the trade that I have already taken. I will also be doing the review of how the price actually performed, let's wait and see how this price gets to play out. This is the first trade ever to be recorded in the channel. See you guys and have a great trading time. All right.